Welcome back, investors. Today, we're going to be discussing monthly dividend stocks. Can you create a passive income from these stocks? What are the risks? How much money do you need to invest to make it worthwhile? And of course, which monthly dividend stocks are the best to invest in? Stick around as we dive in. Welcome back, guys. I'm excited about today's topic, and I want to get into what you guys think are the best picks. But first, let's lay down the foundation quickly. What are the advantages and then the risks or disadvantages in investing in monthly dividend stocks? Thomas, can you briefly highlight that for us?
Right. So monthly dividend stocks, like to my knowledge, maybe in all cases, are these special investment vehicles whose purpose is to pay dividends. And so they choose to pay them out monthly. The ones that spring to mind are REITs and BDCs and closed-end funds. And the advantage to these are tax advantage growth. The companies themselves don't pay taxes in the same way, so they're able to reinvest their dollars in different ways. But then a disadvantage is the tax burden gets passed on to investors. So if you're doing this for income, you're not just going to be paying taxes on ordinary income, but there'll also be some other tax burdens as well.
Mm-hmm. Well, thank you for that quick overview. And now let's get to the exciting stuff. What are your picks for the best monthly dividend stocks to invest in? And of course, why are these your picks?
Well, the two that I picked are two REITs. The first one is it's Realty Income. This REIT invests in commercial properties. It's been around for 50 or 60 years. It's a member of the S&P 500. It's a dividend aristocrat. It has a stable history and a solid dividend payment. I think it's yielding around 5% right now, which is it's a good payment in my book. I like this one over other REITs because of the commercial aspect. It's got less exposure to the ups and downs of the residential market. Commercial business tends to be long-term contracts that are set in stone. It also engages on net leases, which means that the businesses that are renting the commercial properties are actually paying taxes and maintenance and upkeep, which reduces cost per O. And so then my other pick is Stag, and it's the same thing. It's just a commercial REIT. The difference with them is they focus on freestanding properties, which allows them an avenue for growth. So you get a little bit more of a growth aspect with this one, as well as a nice monthly dividend.
All right, Chris, this isn't a contest. Well, I mean, it kind of is. We're talking about money gains here. But are you looking at different stocks aside from what Thomas mentioned?
I wouldn't say different. As Thomas brought out at the beginning, there's a sort of a limited pool when you're looking at monthly dividend stocks. Realty Income, certainly one that I would be considering. Same with Stag. I might add one would be Agree Realty. One of the things that you always need to be careful about with REITs, but especially now, because there's concern about what's going to happen in the commercial real estate market, is what are the underlying properties that these REITs are invested in. One of the things I noticed about Agree Realty is that their clients include companies like Target, Walmart, McDonald's, Costco. So those are fairly stable companies that are underneath it. So you don't feel like that's going to be a risk as far as the REIT itself having revenue and such going forward. So hopefully they won't be as exposed to some of the commercial realty problems that may be emerging.
Okay, so realistically, how much would a person have to invest to get, let's say, $500 a month back?
Okay, so $500, you're talking about, $6,000 a year in passive income. Based on the math right now, I was trying to figure that out last night, and based on a stock like Realty Income, you're going to be looking at probably around $125,000 you're going to have invested to get in monthly dividend stocks altogether to get that kind of return, assuming that the stock was trading at about $69 or something like that.
All right.
Right.
Yeah,
Looking at about a 5%.
That's good to know.
Yeah, looking at about a 5% yield, those numbers are right on.
Do either of you have any other tips for investors that are looking to build a portfolio of monthly dividend stocks?
Right. The best thing I can say is just to keep reinvesting. If you're looking to build a good position that actually makes money and builds value over time, You need to make regular investments in it. You need to build that position and especially reinvest the dividends to leverage the growth. And just if I could, back at the beginning, you asked about risks. And one of the things I forgot to mention is return of capital. One thing that these investment vehicles do a lot of times is return capital and not earnings, which is part of the tax implication. And what that does is it whittles away the value of the asset. So a lot of times you'll look at a chart of a monthly dividend paying stock that's been paying, 5, 6, 8, 10% dividend yield for the X number of years, but the stock price is just because the value of the business is getting whittled away by return of capital.
You have anything else to add there, Chris?
No, I agree with what Tom's is saying. I think the thing with monthly dividend stocks, as much as I love dividends, and I do, I think you just also have to remember that if they're a good option if income is your primary investment objective, because you are, if you're putting aside $125,000 or more of your portfolio towards monthly dividend stocks, that's capital that's not working for you in any other way. So, understand that going in, and if that's your strategy, then yes, reinvest, allow the wonderful thing called compounding to work for you, and let it go.
All right. So whether you're a monthly dividend investor or you're taking a different approach, MarketBeat does have several dividend tools built with you in mind. So seriously, guys, that phrase, work smarter, not harder, that really holds true when it comes to investing. So go ahead and do yourself a favor. Check out the resources I've linked for you down below. Let us know what kind of dividend stocks you're looking into. We'd love for you to join in on the conversation. Thank you so much, Chris and Thomas, for joining me, and I'll see you soon.